Good afternoon, everyone. Welcome to another set of videos in which we continue to learn about Business Central. And today's video is going to actually talk about some of the basics of accounting that you need to know in order for you to talk to a CPA certified or a finance individual while you're actually implementing the Business Central or any ERP solution. So if you're coming from a technical background, this actually video would really help you understand some of the basics of accounting, and that way you can at least understand what the CPA or a finance manager are actually looking for when it comes to implementing the finance portion of the ERP system. And in our case, it will be Business Central. So there are going to be things that I'm going to talk about that you need to understand for having a background in accounting. We'll walk our way through how you see it in the system, so you can compare and contrast different sort of reports when they're talking about balance sheet versus income statement, for instance. And we're going to actually give you some examples as well. So we're going to walk through some of the things to see actually how it works in the system. And I'm going to refer some of the other things to my older videos that you can look into, and then have a walkthrough of how you configure it. But now you'll have a better understanding of the context behind each of these accounting terms. So to start you out with, the most basic thing in accounting that you need to know is debit and credit. So what do you debit and what exactly do you credit? So these two terms are the ones that you're going to actually have to think about and worry about every time you talk about accounting in general. And the second part is the 5 types of accounts in the accounting system. So there are 5 categories, and I'll show you actually where exactly you can find those 5 categories. So actually, if you can go into the chart of accounts, we'll walk our way through those 5 categories. And as you could see, assets is one of the category, liabilities, and equity, revenue, and expenses. So one of them is here, assets. We'll see liability here at some point in the chart of accounts. So total assets are here, so liabilities and equity, so they're combined here. And then we'll also have a look at expenses at some point. So equity is also here. So this is the Kronos Canada. So this is what has been configured already in the system for us to play around with. So it's not something that I have actually configured already in the system for a client. But the point is here to actually understand the different categories that you would need for you in your chart of accounts. And expenses should be here somewhere at the bottom if you can find it. And if not, but those are the 5 categories that you need to know. So those are the interest expenses. That's not the actual account itself that I'm referring to. But in any case, you should be able to find the expenses here as well. So those are the 5 categories that you need to know in your accounting system. And then there's a classification of accounts. For instance, personal accounts and real accounts, which actually has 2 additional accounts underneath it. So real accounts has tangible accounts and intangible accounts. And the third category of classification is the nominal account. So the personal accounts actually account for natural personal accounts, so an account related to any individual, for instance, George or an employee or whatnot, and they are called a natural personal account. There's another category of those personal accounts called artificial personal account. So those can be like an artificial person, like ABC Limited, for instance, who's Amazon Co Limited. So these are the artificial personal account. And the third one is the representative personal account. So these are the representative personal accounts that represents a group of accounts. So you kind of collect them together. So more or less, it would be like an interest receivable account or a capital account. So those are the different classifications of a personal account. And the real accounts, as I mentioned, is like either tangible or intangible. So tangible is something that you can touch, like power plants or machinery or furniture, and the intangible would be like a patent or copyright material. So those are the 2 different sub-accounts of real accounts. And the nominal account is basically that does not represent any tangible asset. So it's a nominal fictitious account, for instance. So expense account or a loss account is a nominal account. Just from the ERP perspective, so all customers and vendors in a business are called personal accounts. So if you were to go back to Kronos Canada Home, and if we actually look at the vendors and customers, for instance, so sales has customers and purchasing has vendors. So all the accounts associated with these two belong to the personal accounts. And anything related to fixed asset module, for instance, in ERP would reside with the real accounts. So we don't have any fixed asset here, but if you were to search out fixed asset module, so you'll be able to see that. And all the accounts associated with fixed asset in an accounting system deals with the real accounts. And anything to do with profit and loss statement are called nominal accounts. So some of the differentiation that you should be aware of when you're actually talking to a CPA certified. Now going back to debits and credits, so it's the backbone of accounting. In order for you to understand, the simplest example that I have come up with for me to understand what debits and credit is, and every time when I talk to a CPA certified in terms of a transaction, I simply understand as debit what comes in. So anything that's coming in into the system or into a company, I guess, is debited, and anything that is going out is credited. So to give you an example, so if you go into finance and general journals, we'll just do a default. So in ERP, at least in BS Business Central, anything on this left side is debited, so meaning what is coming in, and anything on this side is credit. And as you can see, the balance account type, you can select, and balance account number is also associated with that. So debit is on the left, credit is on the right. There's always a balance between the two. What comes into a company is debited, what goes out is credited. If you want to go a little bit further, if you want to talk about accounting terms, so debit is something that would increase the assets, and credit is something that would decrease the assets. And the credit would increase the liability, and debit would decrease the liability. So some of you may understand from an accounting perspective, but for me, debit what comes in, credit what goes out always helps in terms of identifying the transactions and how I want to set up the system. The second golden rule of accounting is debit all expenses. Now that might be a little bit confusing because it was confusing for me at one point, understanding why do I debit the expense. And the reason that is because you're actually incurring a cost. So meaning you're bringing in a cost. So that's why you're debiting an expense. So anything that is costing a company, that's what you're bringing into the system, into the company. So you have to always debit the expense, and you will always have to credit the income or the profit. So any applicable accounts, as we've talked about, and the categories accounts, the golden rule number 2, that debit all expenses and crediting all income, will belong to the nominal accounts. And we talked about the nominal accounts just a few seconds ago, that it covers any profit and loss and anything to do with expenses. So those are the accounts that would be affected there. Now going back to the actual transaction, we can talk a little bit about how the transaction is working. Actually, before we actually get into the transaction, there's another foundational work, foundational part or aspect of accounting that I need to get back to. And I think it will fit really nicely into the actual debits and credits and what we're talking about. The other part is the actual terms that you need to understand before you jump into the configuration. And we'll go to the chart of accounts actually, and it will give you a lot better sense of what I'm talking about. So some of the verbiage that you need to know is like balance sheet. What is the difference between a balance sheet and an income statement? Profit and loss, cash flow, chart of accounts, as you could see here, ledger, subledger, and journals. So ledger and subledger is something that had been a bit confusing term for me, but let me clarify what I have over the years understood and learned, and how I differentiated between the two. So it actually helps you, someone who doesn't have the accounting background. So a control account basically is the ledger account. So a control account is the summary of all accounts in the general ledger. And the details associated with that is called the subledger account. So for you to understand with an example, the details of each customer and each transaction is not recorded in the accounts receivable control account in the general ledger. Rather, these details are actually in the account receivable subledger. So what I mean by that is, if you have an account receivable, that's the ledger account. Everything underneath it is the subledger account. So customer domestic, customers foreign. So these are the subledger accounts. And that's how I actually understand it, how to differentiate between ledger and subledger. So I didn't really understood it until I took read through a lot of material and understood the basics of it. And this is what the basics have been into in my head when I actually talk about the finance or accounting aspects of Business Central with CPA certified. And from the ERP perspective, the ledger accounts are like the fixed asset control accounts or cash and bank account, AR, as we have talked about, account receivable, inventory, or even accounts payable. So these are the ledger accounts. Subledger are basically anything underneath it. So fixed asset master, bank master, or customer master, product master, and the vendor master. So the modules in D365 associated with those ledgers and subledgers are like fixed asset modules, so bank module or accounts receivable module, even accounts payable module. So I hope that that actually helps you understand the ledger and the subledger aspect of accounting. Now, one last thing that I want to show you is the different sorts of reports that you tend to talk about with other CPA certified individuals when you're talking to your clients. Normally, they'll always talk about trial balance or a balance sheet, for instance, or income statement. So go through these, run these reports on the ERP or your Dynamics 365 Business Central system, and see the difference between them. What kind of accounts are being captured? So balance sheet captures a different set of accounts, and an income statement captures a different set of accounts, and trial balance captures a different set of accounts. So try to compare these 2 or 3 reports by side, and you'll have a better understanding of how a CPA certified individual talks in their language when you're actually configuring the system. And that's what you would need to know in order for you to actually configure the system and be able to effectively talk to them the way they want you to actually talk to them. So I hope that small introduction to accounting actually helped you understand some of the basics of accounting and how actually it reflects on the Business Central aspect of it and how you can configure things. So I'm hoping that my next video actually goes a little bit more deeper into the accounting principles, and we'll continue to learn Business Central accordingly.